It was a really exciting time in our journey because we were innovating a product, much like mirroring our experiences with Avenue. We're developing a product and digitising that originations journey for customers. We were doing that. I know it seems like everyone does online originations for savings accounts today, but that wasn't present in 2008.
It's very important to understand someone's credit score, but there's a lot more to an applicant than just what their Pillar credit score says, and we can see that time and time again, where you can see someone who might have a really good score, which may not actually be that great a credit, they just haven't had many inquiries on their file, whereas someone that might have a lot of inquiries is actually not a bad credit, and there's obviously all different combinations.
Welcome to another episode of Common Factor CEO. During this episode, we're going to be looking at disruption and innovation in financial services. I'm being joined by my guest, David Stevens, who's the Chief Executive Officer from Harmoney, and Peita Piper, who is the Chief Executive Officer of Avenue Bank. Thank you both for joining me.
Thanks for having us.
Thanks, Tom.
Now, the Australian financial services industry has undergone various large-scale transformations in the last couple of decades, spurred by a combination of events, innovations and disruptions. New innovations around compliance and risk arose from findings in the Royal Commission. Cloud tech allowed companies to operate at larger scale, and with diversified geographic teams. The growth of machine learning, intelligent automation and AI technologies has driven financial service enterprises to consider and implement new products, services and operational methods. And extensive consultations and dialogue between government bodies and the private sector have resulted in policies that promote a diverse range of products, innovations and a competitive landscape. Now, David, Harmoney was founded in 2014, being the first licensed peer-to-peer lending platform in New Zealand and becoming the leading online marketplace lender across ANZ today. Harmoney has issued over $3 billion in loans to Australians and New Zealanders. What is it that makes Harmoney a preferred lender for so many Aussies and Kiwis?
Yeah, look, I think you mentioned we started 10 years ago as a peer-to-peer lender. Obviously, you had the GFC, only sort of 6 years before that, and that basically consolidated a lot of the sort of finance companies around, kind of disappeared after that period, and there was a real space where the banks weren't really servicing that market very well. Particularly the personal loan market, which what we got into and where we started, and it was very much a one-shoe-fits-all approach. It was you either got approved or declined, and it was a pretty much the same rate. We built the business around being able to risk price our customers. So it might be a customer that may not have been approved by a bank we could approve, and then at the other end we could give really competitive rates for really top quality credits. So we ended up risk-based pricing our loans through 30 different interest rates, and we've assumed loss rates around that. And then we actually, because funding was tough for startups in that environment, come not long out of a GFC, we used the retail peer-to-peer network in New Zealand. So that was mum and dad investors actually investing in the platform and then matching it with the risk profile that they wanted to take, and then getting a return. And they made some really great returns over that period.